If higher rates are the new normal, and maybe they're not, 5% 10-year, is it here to stay? What does it all mean for consumer behavior either way? We're getting some clues from CNBC's latest All-American Economic Survey. Steve Leisman here with those results.
Hey, Kelly, yeah, we tried to drill down into how these higher rates are playing out among the general public. 1,001 respondents to our survey. Let's take a look at their response to what it does relative to paying off or not paying off a credit card debt. And 27% say they're more likely to pay it off. 23% say less likely. For 47%, it makes no difference. And for the rest of this discussion here and the next guest, I want you to remember that 47. That's going to come up a little bit more. We'll go through now. Let's take a look more broadly at other aspects of people's potential purchases here. 11% say it makes them more likely. 54% say less likely to buy a car. 52% less likely to get a new credit card. Same with buy a new home, 55% less likely, and also taking out loans, about half. But notice that another chunk of folks not affected. Remember that idea, because we're going to keep going here. What about higher interest rates? Do they help your household? Do they hurt your household? Let's move on and take a look at this data here. 11% actually say it's an advantage. 44% say a disadvantage. And then look at that again. 41% no effect. You see what I'm getting at here, folks? We're trying to figure out why the economy is doing so well and higher interest rates are not biting more. Look at those numbers not affected. Here's a very quick breakdown, by the way, of groups that are relatively more advantaged and less advantaged. Doesn't mean that they're 50% more advantaged. It just means they're higher than the average. Men over 50, professional managers, those with more than 50,000 invested in the market, those with postgraduate degree and upper class and well-to-do, advantage. Disadvantage, well, ages 35 to 40, right in that 49, right in that home buying area, they're disadvantaged. Also, incomes 50 to 75,000, white collar workers, independents, and those with less than 50,000. One more screen here. Take a look, Kelly, at the demographic difference between young and old. And you can see there, not so much advantage for the older folks, but less effect overall is what you see when you look at that for those who are retired or have, living on fixed incomes or, go ahead.
Can we show that graphic one more time of who is advantaged? Because I'm trying to understand, is this just a very small, who would, maybe people who are earning that yield in cash that previously couldn't?
Exactly what we're trying to,
I can't think of another way to benefit.
I think that's the reason. They are, we did show that there are fewer people taking advantage in terms of their investment choices when it comes to, not fewer, but not as many as you would think. But there is a class of people who are. What I think is important, what's really interesting here is there are groups of people who are tremendously stressed out by these high interest rates, but there are also pluralities that seem to be living outside of that universe, right? And are not affected. And so I think it's something that over time is going to have an effect, but for big chunks of the economy, high interest rates are not bugging them right now.